All right, so I'm here with Floyd. Oh man, I'm gonna ruin this. Marinescu.
That's right.
What national? And I don't even want to do this because my brother always asks people the nationality of it, but I didn't ask you. So what nationality?
That's a Toronto thing, right? We always ask.
Yeah.
I'm born in Canada, and my parents are from Romania.
Oh, okay. So that's a Romanian name.
Yeah, any escu ending is Romanian.
Oh, I didn't know that.
Yeah.
Yeah, I don't know a lot of Romanian people, so I didn't know that.
Yeah.
Cool. And I've been excited for this, even though it came about, well, first we tried to do this, I don't know, what, 2 years ago, and we kind of missed each other's messages. We were delayed with getting back to each other, but then this came about in 24 hours, right? So
there we go.
This is kind of cool. So I don't know, Floyd, so like I was sharing before, your thoughts I like a lot because of what you're doing, and the opinions you have are not, I shouldn't say they're not popular, but they're just not mainstream, I guess. But you put a lot of thought into them, and you put research and stuff. So the one that let's I don't know even where we start. You know what? Give everyone just a little bit of a heads up of like kind of your background, so they know where you're coming from with this. Like, you know, just your brief little journey of yourself to what got you to this point in business and stuff, and why you're focusing on this stuff now.
Sure. So just briefly, I have a computer science degree from Waterloo. Graduated early 2000s. Started a software developer education company in 2006. We do large learning events like 1,500 attendees, 100 speakers in New York, San Francisco, London, and China and Brazil, and did that for 15 years. And then started to. I sort of exited by promoting management teams so I could free up my time, and I've been spending more of my time and resources pursuing promoting good ideas to help society get better. I like thinking about sort of what do we need to get to a better future, a Star Trek future. So I do sort of as a habit, I like to think about innovator stage topics as opposed to things that are already in the mainstream that can solve especially systematic issues that we're facing as a society. And I coalesced on universal basic income, started a nonprofit that promotes it. It's like a marketing agency for basic income in Canada. It's called UBIWorks, has like tens of thousands of followers, and produced like 900,000 acts of digital activism with people emailing their MPs over the last 5 years. So I'm really pretty proud of that. I think we made a dent in the country. And then the last year or so, I've been focusing on housing market and coming to this concept of economic rents that I think is what's really screwed up about our current market system, that we need to find a way to change our taxation system off of earned income to unearned income, leading to land value tax, which is an example of such a system that I think would dramatically improve how the housing market works.
Yeah, so let's get into that, because that's what caught, I mean, with the UBI, that's why I reached out to you before, and then this recent one, I didn't know you kind of have been at this for a year. I recently came across my radar relatively recently, and that's why I was like, I got to reach out to Floyd. I think I had that as a note to do for just a week or two. So in the last couple of weeks, I've seen that. So the land value tax, because as soon as people hear the word tax, they run and they're in fear. They're like, as a Canadian, they're like, we have enough flipping tax. What the heck is this guy talking about? You know. Yeah. But so can you give everyone an idea of what you're thinking with well, not even you. I mean, I know that it's something that's been looked at elsewhere. So what is the land value tax? How does that type of thing kind of play into real estate?
Okay, so starting from scratch. So land value tax is different from a property tax. A property tax is a tax that includes a bit of land tax, a very small amount, but primarily it's a tax on the improvements, which actually means it penalizes productive development. Like if you create a building or if you improve your property, you end up paying more tax, which is kind of strange. It's almost like the equivalent of income tax in the asset space. And if you let your home dilapidate, then you pay less tax, which is very strange because it promotes like actually misuse of land and property the way it is. So a land tax is the opposite. You're taxing only for how much land is used. And most land taxers believe that we should have no other taxes, no income tax, no property tax, just tax the use of land to achieve a number of things. Firstly, land tax. Land value, if you really think about it, if we're really honest with ourselves, the value of land comes from community investment, from businesses, from people, from jobs, location. It's not produced by the owner of the property. It's produced by the community around through coming together, working together, public investments, train stations, bus stations. So the growth in land value has been identified since the beginnings of capitalism as a form of public property. But the fact that it's privatized is driving a lot of perverse incentives in the market. Now, I'm not saying we should nationalize land at all. I'm talking about real capitalism from the views of Adam Smith and the first economists who believe that we should simply tax land value up to a maximum of what its rental value might be, and then don't tax anything else. Like let entrepreneurs do their thing, create more innovation. Because if you look at what what capitalism is supposed to do. It's supposed to encourage innovators to generate value. Which means like start a new business, create a service, build an apartment building and rent it out. That's adding value. But simply holding an asset and waiting for it to go up due to work that you didn't do is not really capitalist. It's actually feudalist. It's considered a rentier economy, kind of like the peasants and the serfs from like back in the day in the lords. So that's like I'm going really historical here because
but it's important.
It's important to understand the origins.
It's nice to understand that, right, where it's coming from. So, but in that type of setup, so there's different, because what about the resources then on land? That gets attributed to, so if I have a piece of land that has a lot of natural resources that can then be, mined from the ground or something, then how does that play into things? So I want to come back to the cities,
sure, but
then there's got to be some sort of value, because if I'm just land banking and I'm sitting on this piece of land, but there's resources there that can be used by people or the community, local or larger community, then the idea is that there's a certain amount of tax on that based on what that land can produce. Because as the landowner, I wasn't responsible for those resources really being there. Like if there's water underground or energy or lumber or something, like I wasn't responsible for that. I just bought the land after, right?
Yeah. So let me differentiate again. I love that we're going into this stuff. This is great. In the early economic thinkers, the first 100 years of capitalism believed that the value of nature was created by God, not by people. And they have a concept in economics called economic rents, which is the rental value of nature. Basically, you can think of that, or it's unearned income due to possession or monopoly, so non-competitive behaviors. So when they look at the value of any natural resource, whether it's water or minerals or oil and gas or land, they differentiate rents as a form of profit that is unearned versus the part of profit that is earned through entrepreneurial pursuits. So for instance, let's take oil and gas. Norway and Alaska capture a lot of the profits from their oil industry. Norway up to 80% of the profits in their oil industry. And yet they still have an oil industry. Like companies are still going there, getting out the oil. So rent by definition is the additional amount of profit made above and beyond what would incentivize someone to go in and produce this value, to extract this resource. So if you agree that oil is not owned by anyone, then just because someone got there first, they shouldn't keep all the value. They should keep enough to pay labor and to pay returns to capital in competitive markets, and the rest should belong to the public. And Norway has done that. 80% of oil revenue, of profits have been going to a fund that's currently worth $1.3 trillion. Alaska has been doing that. So like 50%, I believe, of oil profits or so have been going into a fund that's buying stocks and bonds. And then every Alaskan gets a check every year in their share of the fund's returns. So
really, I didn't know that.
Yeah, up to $2,000 at most. So Alaska, although it's a red state, it's the most equal state in the U.S. And none of the Democrats or Republicans are willing to screw around with that fund because the people feel a sense of ownership in the fund. So I'm like thinking, to have a better future, we all should feel a sense of co-ownership in the value of nature, because if we don't, we have a system where people are taking more than they need and everyone else has to work harder just to live. And we can see that in oil and gas. We can see that in the carbon tax. You can think of the carbon tax and rebate as a form of commonwealth, like who owns the air. So if someone's polluting it, then they should pay us, for whom we're losing value. We're losing the value of our breathable air. We're losing the value of our planet. So the carbon tax is a form of tax on rents. Looking at minerals, similarly, it should be enough for a business to go in and mine minerals and have enough to pay their investors a competitive return and their employees a very fair or competitive or even large salary, but the rest should be considered public property. So that's what economic rents are. And applied to land, land is the first and most obvious monopoly of all, because when you possess land, no one else can walk on it or use it. So the rental value of land has been considered an ideal source of taxation, more than income tax or transaction taxes or any other tax, since the beginnings of capitalism.
So that makes sense.
Since Adam Smith, he was very for land value tax.
So I can buy that argument, because I look at certain things like the Nestle contracts for water. Right?
Yeah.
And, when I dove into those, I mean, that was I guess I forget when I did that. It was a number of years ago now. But when from what I was learning about that, I was like, holy, this is crazy. They bought some land. They tap into these water systems underground, and they extract all this water for less than a penny a bottle, mm-hmm. and then they're selling it to us between the markup and then downstream from that, we don't know what's happening and where that water source would have gone and what it would have done, and so there's all these. I can understand that argument. Where I get lost a little bit on this is that money, like, I guess it's not so much the argument, it's where that money goes afterwards. Because when you talked about the carbon tax, and, you know, the reason I don't like the carbon tax is because the money goes to the government, which has been so irresponsible fiscally. And what are they doing with, you know, what this let's say this carbon tax, and it is making things, you know, there's a trickle down effect, making things more expensive and things like that. And it's like, I feel like for me, where I get lost in these arguments, or not necessarily, because I don't want to say disagree. It's not that I disagree, but it's where I'm like, I don't see this working. It's because the irresponsible fiscal, you know, arms of the government that they just waste things. They just spend money on studies and they give it to their, you know, to people that support them and all these lobbyists, stuff like that. And I'm like, man, with that system in place, none of this ends up working, because then all the tax money just goes to the high ups and it never gets distributed down afterwards.
Well, ideally it would be. So this is where there's kind of two camps in that whole worldview. Many believe that the value of nature should be collected and redistributed back to everybody, because who owns it? We should all have an equal share. Thomas Paine, one of the founders of America, had that view. This is before income tax existed. Said we should all pay a bit of land tax, and everyone should get pensions, and like we should be able to have child credits. He wasn't for. I think he was only focused on seniors and children. So that's certainly a common view. That's why Alaska. Actually, the governor of Alaska, for that exact reason, created the whole permanent oil fund. He says, if we just take all this oil for the government, then it's going to bloat government. If we just give it to the corporations, they haven't earned it, then how does that help Alaskans? Yeah. So I'm going to set up this fund and pay Alaskans their own share of the oil revenue to prevent politicians from spending it, right? So now with the carbon tax and rebate, I believe in the provinces such as Ontario, where it's given back to the province. I believe 9/10 of it is going back to households. So it's a very low overhead with regards to it creating government bureaucracy. So it's actually, I would say it's a successful example of a Commonwealth-style tax on nature that is given back to people directly. Some provinces have their own schemes, like BC and Quebec, but most Canadians are actually receiving the vast majority of it back directly as cash. And I believe 80% of Canadians are ahead financially from what they're spending, from what they're receiving. So anyway, air is just one example, right? Like this applies to every type of resource. Like how would the world be different if all the world had 80% of its oil revenues being shared for needs of the public? Yeah,
you know? It would be there's some countries in this world where things would be very different like that, you know?
Yeah. Well, when Iraq fell, there was a move to try and convince them to use oil revenues to pay a UBI. Fortunately, that failed. You know, imagine that had happened. There would have probably have been no ISIS. There would have been no extra wars there. People would have been very prosperous.
Yeah, and I'm sure there were some corporations going in there after for the rebuild, you know, of a certain nationality that were very against doing that, and were very happy to take as much profits from that country as they could when we got in there afterwards. And I think we're seeing some of those same countries now look at other areas of the world that get, you know, decimated by war, with these tragedies happen, and they're just like automatically they're like, oh, hey, by the way, I'm here. We can help with the rebuild. Why don't you start giving us the contracts?
Yeah, it's
but that's a whole other. Yeah, that's okay. So back to the land value. So so I understand that on the resource side now. So now we take that and we apply it to, you know, we're in Oakville, so let's just use this area. You know, have some land here. There's not much real resources here. There's no oil or things like that. So I have some stuff. So how does this then apply to people that are, you know, own in the typical suburban neighborhood, you know, some you know, whatever, single family home or just some sort of property there? How does it look compared to what it looks like today? Because the house on it, you're saying, wouldn't be, because that's the increase in use. So we're not taxing the value of that house. We're just taxing the value of the land for everyone.
That's right. Yeah. So in CommonWealth.ca, we're producing research and we're looking at what a full land tax would do in the economy. And I'll bring it back to Oakville in a moment.
Okay.
But just the top line numbers. If you tax 3/4 of the rental value of land, it would raise $194 billion. And if you use that to reduce income taxes, then all tax for everyone, no one would pay any income tax for under $88,000 of their job, of their first earned income. That's one way it could be spent, is to eliminate taxes for 91% of Canadians. Or it could be done differently. It could be done like the carbon rebate, where it's given back to households equally. In that view, we ran some early stage analysis, and the vast majority of households actually come out ahead, meaning they experience tax relief. So like you'll pay less in land tax than you would have in income tax, plus this credit that you're getting back, which is kind of like a UBI, but that's not the intention. The intention is we need to do a land value tax to fix our problems in our housing market, and the best use of that money is to give it back to people instead of funding government in that way. Or if you replace income tax, you could see it as using land tax to fund government, but instead of income tax, you're taxing unearned income versus earned income. And the goal of such a land tax is to keep the price of land low. So if you imagine like an instrument, any financial instrument is only worth as much as it returns. So if you tax the value of land, then land will be worth less. And
but how? So okay, so because and I see the numbers in this report, and they're all thought out, which is great. So the land is the additional rent collection proposed is 194 billion, like you said. So, and all of a sudden, everyone's ears will perk up and like, hold on, this is good. But could, the value of this or the income generated could potentially get rid of income tax for the vast majority of Canadians, or replace it. But how does that work? Because the land is getting taxed now already. So where does this additional where is this additional revenue coming from?
Yeah. So again, going back through to Adam Smith, to the first economists, they believe that the land's value comes from its rental value. If you were to rent it, what would you pay for it? Whether you're renting it to farm or renting it to whatever. So whatever you'd pay to rent it, obviously you must be able to monetize something on top of it, or you wouldn't pay that number. So the market will discover what that number is, and that number leads to the full value of land when you buy it, because we're not renting land right now, we're buying land. So the current value of land is the capitalization of its future potential growth, and that's why it's worth so much. Everyone's in the market buying stuff because they expect prices to go up, right? That's driving our market in unhealthy ways in many ways, and so a land tax is. Property tax currently includes a bit of land tax, probably 0.25% or up to 0.5% overall, versus the actual rental value of the land. Versus if we were to have a taxation system where we reduce income taxes, but tax, let's say, 3/4 of the value of land, it would be equivalent to about 4.2% tax on today's land value, which is much higher than 0.5%, 4.2% of today's land value.
But of the land value, not of the property value of the land.
Just the land.
Yeah.
Now, doing that would immediately reduce the value of land. So that we predict that if you had a 20-year slow transition from income tax to land tax, the market would still respond right away. So within a year, land could be worth, in that particular taxation rate, 3/4 less.
How does it reduce the value of the land?
Because you're paying more to hold it as opposed to paying more upfront, and then it's costs less to hold it.
Got it. Okay, so it just changes the numbers over the long term. That's why,
versus the short term.
Yeah, gotcha.
So, or you can think of it, if you imagine another instrument, imagine a bond. If a bond gives you 1% versus 5%, the 1% bond will be worth less.
Yeah.
Right. It's the same thing.
And then people are incentivized to do something with the land instead of just holding on to it.
Yeah.
And then if they do something with it, they're rewarded for whatever they do on that land to improve it, to generate revenue for themselves, or whatever the case may be, because they're paying a higher rate on the land, but they're just paying on the land.
Yeah.
So as an entrepreneur or anyone that's trying to develop something for the economy, if you develop that and you're earning revenue on the business or for yourself, well, that revenue, the tax revenue actually goes down, and then so there's no disincentive really to. So that's why it brings the land value down. Because if you're not going to do something with the land, you're like, I don't want this thing, right?
That's right.
Yeah. Okay.
So imagine if land costs 3/4 less. It would be much better for entrepreneurs. It would be better for people who can't save up enough to acquire the original plot to do something, whether it's build an office building or open a convenience store in an expensive area. If it's cheaper to acquire, more people can enter the game and be productive. If there's a huge barrier to entry in cost, then the banks are getting rich, and actually we're limiting the number of people who can engage in business because they can't save up for the down payment. So having land being 3/4 less means that the median property would be about 42% cheaper, which is quite controversial because we're talking about something that would actually reduce the equity of homes, but it would increase the value of jobs and the amount many people make from businesses. So that's where there's a transition, a bite that society would have to accept to have a fair economy that is more productive.
So this is interesting because and I didn't know this till yesterday, but so you're an investor yourself. You have a multiple, what are they, like buy and hold, like long-term, like?
Yeah, I have a mixed commercial property and a few residential properties.
Okay. So then, and you're supporting this, looking at it and saying, well, the value of those properties would come down.
Yeah.
Right. But you're still okay with that because you think it's for the greater good.
It's for the greater good. And I mean, just look at the plight of Gen Z, of immigrants. People are leaving this country. Immigrants are coming and leaving. Things are just too expensive. So whenever this happens, research has shown that the high rising land values leads to economic decline. Because as people spend more of their earned checks from their jobs on just basic living, and currently in Toronto and Vancouver, people are spending 70% on average of their paychecks on mortgage payments. When that happens, people spend less in the real economy. That's why our economy is twisting towards a real estate-based economy instead of a productive real economy. And it's not going to end well. Like every revolution we've ever had has come from life being too expensive for the majority of people, and we're going there. So yes, I would lose probably a few million in equity, but the gains in terms of reduced income taxes, for me, I'm in a different category, so I would be like the 1% losing a bit more. But the vast majority of people could experience tax relief, and we'll have a much fairer, more dynamic economy. And again, the housing market itself would work better. So when I bought my first property, I read all the books that you've probably read too, and this was like in my 20s, and I was so paranoid about market fluctuations that I'm like,
that's what everyone's worried about getting in. You're trying to time it, like, oh, should I wait till next year or like 6 months from now? Or you're like, if you're holding the property for 10 years, who the hell cares when you buy?
There's that. And I thought, okay, I only want to buy property if it's justified by its yield, like meaning like the rental income. Does that make sense cash flow wise? And I don't give a shit if prices go up and down. And that was just a decision I made to look for properties that fit that. Well, in a land value tax system, that would be the investment case for everyone. You'd be buying in order to offer to rent, but you would not be profiting from appreciation as much. That would be reduced in a land tax scenario, because if you look at how value grows in real estate, the value of the property depreciates, the value of the land appreciates. So the real estate crisis we have is actually a land crisis. So if we make the whole game of chasing land value go away, because land value really is publicly generated, it's a better source of funding public needs than income tax and other things. If we make that carrot disappear, then people entering the housing market, investors, I think will be entering it from a more virtuous, more noble perspective. It's like, let's build something, let's create something, let's offer like a home as a service business, like leasing a car. I'm going to lease you this car because you need the car, but I'm not going to like own all these cars because cars go up in value without me working over the next 10 years, and I just become wealthy having not really earned it. So I think it'll just really improve the dynamics in the housing market, but also a lot of the incentives that are actually like causing our problems today with overpricing. It'll fix, I can go into each of these, but on the demand side, it would reduce the number of people that are buying it purely for appreciation reasons. So you won't have people like my friend who bought a condo in a negative cash flow position, and hopefully it goes up in value.
Well, look, we've seen a lot of that over the years where people were walking into sales offices and they're just like, I just felt like I needed some real estate. So, and they had, some of the builders have these drawn out deposit schemes where you put a low amount down. So they're just figured, of course the value is going to go up. So they just buy 3-4 units. They don't even know what they're buying. They're just like, I don't know, the value is going to go up. And I'm like, yeah, that's, I don't look at that, to your point, I don't look at that as investing. It's speculating. Yeah. And I feel like in the discussion when people talk about investors, I feel like it's important sometimes to distinguish between the two, because I feel like it's a definitely different skill set, and it's a different mindset as well.
It's a different mindset. Right? Yeah. So on the demand side, during COVID, we saw huge price increases. Were not because suddenly magically there was less supply. There's as much supply as there was before COVID. That was a demand spike that was driven by investor exuberance with low interest rates and more people wanting to get in. So there's really two markets for buying real estate. There's the market of families who need to live and rent, and there's people who want to buy to rent out to others, and there's the market of people who want long-term wealth appreciation. And a high land tax would reduce that second market significantly, and tens of billions of dollars would flow into the stock market, into starting businesses, into things that we actually need, more than just holding property. And I think the market right now, in some markets in Canada, 90% of new condos are being bought by investors. Instead, it would be families buying those condos, or handyman types who like to maintain and offer them to rent as a service. That would be a much better economy. So that's the demand side. I can go into supply and allocation dynamics, but
let's stop there just for a second.
Sure.
So I'm curious your thoughts on something, because I wish I had that graph available. I can look it up afterwards.
Sure.
So we mapped out from 69, the growth of the M2 money supply in Canada compared to the average Toronto Real Estate Board price. And the numbers are obviously different because M2 money supply is higher. But if you look at the graph, the lines and the increase in pace of increase, they mirror each other very closely.
Wow.
which was very interesting to me, because when I first got it sent to me, I was looking at it. I'm like, holy cow, this is like, it's mind blowing to me. And something we thought for a while, I'm curious your thoughts. During COVID, there was definitely a demand spike, and driven by low interest rates and things like that, for sure. So I agree with all that. But what percent of this problem that we're having now with the real estate prices is because we're like the prices, that the sticker prices are going up, but the value of the real estate obviously hasn't changed. And are the sticker prices only going up? So if real estate, for example, is 10% of all the money in Canada, it's worth 10% of all the money of Canada, and there was $1 trillion Canadian dollars available. And so it's worth $100 billion, just using round numbers. And then all of a sudden, the amount of M2 money supply goes from $1 trillion to $1.5 trillion. So real estate still holds the same same percentage of Canadian dollars, but no longer is all that real estate combined worth 100 billion, it's worth 150. So like, what role does that play a bigger role than people speak about? And is that something that we need to look at fixing? Because that then prevents some of the problems that we're in. I'm not saying that this wouldn't work as well, but is that just like the way we're manipulating the currency? Isn't that screwing everything up more than anything else?
Yeah, that's a good question. And I discuss this with my Bitcoin or conservative friends a lot. And it's hard to say what percent of an issue that would be. I would like to point out that most people don't know that 97% of the money supply is actually created by private banks.
That's true. So when they borrow the mortgages, when someone's like getting a mortgage, that increases the money supply. So which one kind of comes first?
It increases the money supply because banks can create credit almost out of thin air, which sounds controversial, but you can look it up, private credit creation. So 97% of the money supply is created by private banks, being driven by everyone's desire to acquire land wealth. I mean, it's the desire to see appreciation happen that drives the incentives for the whole system. So is monetary inflation an issue? Probably, because I mean, the argument there is that, when you're in an inflationary situation, you want to hold assets whose value will be protected. So that's why gold and housing could be seen in a similar way as a hedge for inflation. So sure, we haven't often been in a high inflationary position in the last 30, 40 years, like currently during COVID was a blip, right? So I would say, it is an issue, but I don't think it's nearly as big an issue as the fundamental incentives that everyone wants to get in on the land wealth game. And if we had a land value tax system, less people would have been overbidding on homes during COVID anyway, because they only would have been buying it if they actually needed it. Yeah,
so it helps. So even if that problem exists, this would help alleviate that. It would exist at a lesser degree.
Yeah. I mean, because people were proponents of this like hundreds of years before we went off the gold standard. So it works in any situation. But so I just want readers or listeners to come away with the knowledge that the private banks are a huge problem. In Canada in the late 90s, we did away with fractional reserve lending, which means banks aren't limited by how much deposits they have. They can create credit. If you're qualified, they can create a loan for you, and that money was just created as credit. It's created when it's issued, and it's destroyed when you pay it back.
It's crazy when you think about it. Yeah. It's kind of crazy.
It's kind of crazy, but the impact on buyers is that you're going to pay the cost of your home twice in interest payments, and like that's kind of nuts. So really, the bank makes the most money at the end of the day, and again, selling the system in an LVT system, your debt would be much less. So the banks would not be profiting off land wealth, which is unearned for them too. They'd only profit off the building wealth, which is good. That's pro-capitalist. They should be inspiring. Loans should be going to business and construction, not to just sunk into land equity, which doesn't actually grow the economy. If you think about it, like when Like capitalism works because if a price goes up, the market responds by creating more of what people want. And then people get more of what they want, and then there's signals to the market to continue solving human needs. But you can't create more land. There's a fixed supply.
Yeah.
So when the price of land goes up, everyone else's life gets more expensive. And that's why we'll always have poverty until the end of time, until we address this issue of land wealth. Because no matter where you are, no matter how progressive or how futuristic a society becomes, if you have 60% of the population profiting off the 40% that doesn't own and is renting and has to work harder to keep up with rising land values, you will always be poverty.
Yeah.
And even worse, even if you have a basic income, prices will continue to go up because everyone's trying to get access to land wealth as a wealth creation scheme. So we got to get rid of that so that we can actually have the real economy can drive society, can drive pricing, can increase wages.
So then on the supply side, and that all makes sense. And then and you were talking about the demand side, and then we kind of went off before you were going to talk about the supply side. And you said, in a typical economy, when there's demand for a product, so like housing, then there will be more and more creation of the product because people see that opportunity. They see where the demand is, so they fulfill that demand. And then usually in a typical kind of economic environment, there ends up being an equilibrium. Typically, it kind of overshoots a little bit. So there's too much of the product, and then it kind of floods the market a little bit. The value of that product then comes down because there's an oversupply, and that equilibrium evens out. So on the demand side, then we're not seeing that because we're not able to create. Well, I mean, the immigration, like the population growth policies that we have right now are really kind of spiking demand, and we're not able to keep up with that. So, but this doesn't seem like that. The constraints we have in place now on the demand side, and maybe this is just short term, so it probably doesn't really apply, right? Because this is more of a longer term thing. Because I don't see how this really fixes the constraints that we have now on the demand side.
Yeah, I'll try and go into that. I got to finish that thought about the banks. So
the banks are evil. We already know that.
Well, I mean, they're just following incentives like anyone else. But
well, hold on. Actually, they're not evil because I'm just signed for a mortgage. They need to release funds like next week for me. So they're not evil at all unless this is after those funds are released.
God, was it Joseph Stiglitz? He's a Nobel economist who said the difference between fraud and incentives is very blurry or something like that. It's just incentives.
Yeah. You can see that in the banks for sure.
Excuse me. So in the late 90s, when they removed the fractional reserve lending requirement, literally you can see starting from late 90s, the arc of home prices in Canada started just going way up and up and up and up. Divorced from growth in median incomes. So I think unlimited credit, unlimited money printing by private banks is like gasoline on the fire of incentives that already exist.
For sure.
And U.S. has not experienced this craziness. I mean, their home price ratios to incomes have been reasonable, but in March 2020, they got rid of their fractional reserve lending rule. So I'm actually thinking, the U.S. is going to follow Japan and Canada over the next 15, 20 years and have a gigantic bubble, way bigger than 2008. So
and it started
good time to buy American real estate.
Yeah, and it is starting down that path, actually, if you look at the way their values have gone.
Yeah.
It started to separate a little bit more. I don't know if it's going to come back. It's still a relatively short period of time we're looking at, but it's interesting you say that because I didn't know that. I didn't know they did that.
I just found out that last week, like, oh shit. So if you look at what happened in Canada, it was a few years before that showed up in the slow increase of prices, but over 20 years since the late 90s when that happened, you can see where we are in Canada. I think the U.S. might follow suit, so it's a good time to buy real estate in the U.S.
So for all their banks? So all their because the banking sector is different there a little bit. There's like the 5th, 3rd, 18th corner store bank. There's so many of them, but it seems like it's best it's not regulated in any way.
I could be wrong, but my reading was that this was a federal regulation that was relaxed in March 2020. I just found this out last week that there's no more fractional reserve lending. I think I saw it on Wikipedia.
Yeah, that's super interesting. I definitely got to look into that.
And like, what is the role of credit in home buying? So a house is worth as much as a bank will lend against it.
It's a good point, yeah.
So if a bank has unlimited credits to lend, then that means homes can be worth an unlimited amount. There's no limit in the real world for what homes can be worth if banks can just create credit out of thin air.
And generally, people don't care the price tag of the home. They care what the monthly payment is on the home. Because if someone's paying $10 million for a home, but they only have to pay $100 a month for it, they're like, that's fine. I'll pay the $10 million. It doesn't impact them.
Well, they will, but yes, I mean,
like it'll take forever to pay off.
It won't in the short term, and that's how the banking system profits. Because in the end, people will pay more than the value of the home again in interest. Wouldn't it be better if maybe you had a monthly payment, but your debt was like cut in 3/4 less.
Yeah, so the bank doesn't get the interest. So with this setup then, because the values come down, there's less interest being paid to the bank. There's more tax being paid. That tax, if it's managed responsibly, then gets
spent on our needs
out to the economy, to the community, for whatever the needs are in the community, and help people that way.
Yeah, so it means that publicly created wealth is being spent on the public, and privately created wealth is staying more private, and that's a virtuous system in my view, because again, the fundamental insight is that the value of land is publicly created, whereas the value of your income is not. You created it privately, and so I think I forgot what your question was about demand.
Just does the what we're seeing now?
Yeah.
So the dynamics we're seeing now, where we're having strong demand growth, primarily through population increase, population growth, and constraints on supply. This and this current dynamic doesn't really help either of those right now.
Yeah. Right? So again, I mentioned that there's two. I mean, there's more, but simplifying it down, there's like two buying motivations that drive demand pricing. There's the demand for the actual number of people who need a home, like the real economy, like people's need to live. Yep. And then there's demand from people willing to overbid due to speculative reasons and to create wealth long term.
Sorry, the question was around supply. The constraints around supply.
Yeah.
So, because I think you spoke about the demand. Yeah. And then we're going to move on to supply, and I don't see how it fixes supply. So I don't mean to cut you off.
Oh, okay. Right.
But I think we covered that stuff.
Yeah. So obviously we need more supply. However, I think the supply arguments in Canada have been dramatically overblown, and here's a few cases for it. I think it's been shown in Vancouver over the last I believe 30 years, the population has doubled, but housing supply has tripled. But yet the price of homes has quadrupled, and the speed of new construction, of formation of new units has outpaced new family formation. So there's an example where we built more supply than was needed, than we grew by, and the prices still skyrocketed. And it comes back down again to
speculation
and land. Like land is constrained, it's fixed. Like if you look at the property assessment website in BC and type in some random addresses in Vancouver, I just found one that was like 90% of it was land value, and like holy shit, like that's high. So that's why again it comes back to we're not using land well.
But how does it change for like a condo?
Yeah.
Because if you're on a small part of land, you're putting a lot of housing units. Yeah. So in cities, it changes the dynamic of that, right? Because then what's if you're just taxing the value of that land, but you're taxing the value of that land based on its maximum potential value, right? So so then it would be 4% of this parcel of land that has 100 units on it.
Yeah.
So the number there is substantially higher than the same size of land that has 2 single family homes in the same area of the city.
Okay. So yeah. So. Toronto has this problem a lot. You have areas that are like, 2-story, like duplexes, triplexes, right next to areas where there's skyscrapers. In an LVT system, if you have the same plot's land size between the house and the skyscraper, they'll pay the same land tax. So what that means is it's pulling the market to convert those homes in a downtown core into skyscrapers, because that's what society needs. Otherwise, the land wouldn't be worth that much. Mm-hmm. It's location value versus a home in Mississauga or in Milton is a lot cheaper because the land value is a lot lower. So we're not talking about eliminating single-family homes. We're talking about creating the incentives so that we have the right utilization of land where it's needed. So Minnesota and Oregon passed 4-plex and 6-plex around transit lines as a right. What we just got in Ontario recently a while back, and it hasn't dramatically improved supply. Because people just aren't motivated to sell. If your land value keeps going up, you don't have to do anything. A lot of land is being held underutilized because, especially by seniors who are staying longer in homes bigger than they need, and that's an allocation issue. Currently, there's 5 million empty bedrooms in Ontario, which is equivalent to 25 years worth of construction at the current rates, mostly being occupied by seniors. If we had a land tax, then they would have the incentive to then right size and keep more of their money. And then we'd have all this supply being opened up to families who need it. I also read an article recently that if mom and pop investors got less involved in buying condos, it could, just that alone could create 1 million units for families to buy over 10 years without any new construction. You're just changing who's buying it and for what reason, as opposed to incentivizing the wealth creation aspect of homes. So so supply isn't the only explanation for what we're going through. I mentioned the Vancouver example. A stat we frequently hear in the news, I think pushed by banks because it profits them to have more mortgages, is that Canada has the lowest number of housing per capita in the G7. Actually, Canada, UK, US, and Ireland have practically the identical number. That's within like 5 to 10 units per thousand difference. So it's basically the same number. We're not the lowest. We're like the same as these 3 other countries that have way cheaper real estate costs. So that proves that it's not only a supply issue. Of course, we should have more supply. The market should drive creation of more supply. We should remove a lot of the zoning restrictions we have, but that alone will not be enough. So that's why I've come to see that I think we need more of a kick in the butt to make the system work well. And a land tax would create more supply because it punishes underutilization, as I explained in the example earlier, and it improves allocation, people living within their needs.
How hard? So it makes sense,
yeah.
And I can understand where you're coming from, especially like around the transit line. So people there's an incentive because the tax on that property goes higher because there's a higher best use for that property because of the easy access to the transit. So you can put a sixplex or whatever, a triplex on it.
Yeah.
But I'm just thinking, if I'm the person that's living in that home, and I'm the senior, I'm, 65, 70 years old, and this type of thing comes in, I'm like, well, screw you. Like, this is my home. I don't want to redevelop it into a 6-unit property. But I guess then the idea is it's like you mentioned before, it's phased in over I think you said 20 years, right?
Yeah.
So over decades, so they can plan for it. And then someone who's the some sort of developer, some sort of entrepreneur is going to come in and they're like, hey, look, they're going to get a really fair value for the home. It might actually, in some cases, they might actually pay more for the home to those homeowners because then they're able to do something else with the property and then earn a yield from that development, which is then a real investor because they're actually creating a product that people need and then holding on to that product and leasing it out, just like the car example, right? So that's the thinking there?
Yeah, exactly, right? So a lot of seniors downsize in their old age to reduce, this is very similar. No one's being forced out of their homes. In any real transition plan, probably the existing generation should be given the right to defer their tax until sale, but the next generation would know how the system will work. They will benefit through tax relief overall in such a transition. Young people, they'll buy cheaper property, but they'll know that once they're retired, unless they've gotten wealthy or have, they may not want to. They may not want to stay in the unit that they're in because it doesn't make sense financially. And that's normal, right? An economic system is supposed to promote efficient use of resources, efficient allocation. That's the whole point of an economic system. And our market system has been more efficient than any other, except our treatment of land, because our treatment of land is still based on old feudal norms. We're just holding land makes you wealthy. And that's why some of these things are just not working. That's why we have an issue of 5 million empty bedrooms in Ontario. So I remember hearing a guy from Canadian Centre of Economics Analysis who produced that research saying, we don't have a supply issue. We have an allocation issue. That's one point of view. And then, I've been saying we don't have a supply issue. We have a demand investor speculation issue. Frankly, we have all of the above, right? We have underutilization because people aren't paying a fair price for land. So it encourages holding on to it. So there's, you remember Nob Hill Farms?
Yeah.
From back in the day? I was in Oshawa doing a talk similar to this a few days ago. And they have a property, a Nob Hill Farms property, which for 20 years has been derelict. It's been dilapidated and falling apart. The city's been trying to buy that property for a long time to build a GO station, and the owner just wouldn't sell because he knows that the rising land values coming from progress, he'll just benefit from it. And he's not motivated to work with the developer either. So this land's been withheld from public use until finally, I think last year, they expropriated it. They forced him to sell and paid him a fair price, and now eventually we'll have a GO station. But in an LVT system, there probably would have been a subdivision there 20 years ago, or maybe a GO station already, because we're not encouraging people to keep valuable resources out of society's needs, right? So that's why our incentives right now are perverse. They're actually antisocial. and we can fix that.
Yeah, that's something that's, I guess, gets lost sometimes in this type of argument or this type of conversation. I feel, because so much is looked about the value and the tax number and this and that, but when you look at what the reason is behind it, and if you're able to find a way, and whether it's through this or something else, to properly support the community, it really changes the dynamics of where you live, and it can be very different. One of the biggest things that really kind of I don't like and really frustrates me in our immediate community society here is the way elderly people are treated. And, I just don't like the way those final years are put about. And, we just kind of like, oh, we'll just put them in home because they can't be cared for. And there's not enough funds in these homes. And we just don't have, the resources to take care of them. And I just so that's the way things go. Like, that doesn't seem right to me. I mean, if someone's contributed to the community and they've done things and they've helped people and their kids and they've done this, I feel like we should be helping them further along and respecting them more and being able to kind of give to them a little bit more than what we do. It's like, it feels like as soon as someone's not a quote unquote productive, member of society anymore because they don't have this job going on, they're going to on a regular or whatever the case may be, they're just kind of like cast aside, like, oh, okay, well, we'll just let them do their thing until they disappear. And it's shit. And if you can figure out a way to get this revenue and create communities for people,
absolutely,
it changes where you live. Like, it just
would encourage that.
Yeah,
I believe in the UK they do really well with seniors communities that are almost like resorts, and where seniors want to go there. They want to go there because it's fun and they have a community. Like,
but here they're so expensive that it's very hard for anyone to do. But if we could take resources that are then there and then put them into these areas, it changes it, right? Yeah,
that's right. I mean, that one of the ideal sources of outcomes of funding from any taxation system could be that, including land. But yeah, I mean, ideally seniors are living with family or they're living in communities and not alone. There's an epidemic of loneliness among seniors.
Yeah.
And in some way, these incentives contribute to it because, you maybe you're alone in the area that you lived for a long time, but there's no one else around, instead of joining a community, not a old age home, but being closer to other seniors who live in community.
The one that always gets I go back to is whenever we go back to Croatia. So we go back to Croatia every year for usually about a month. I shouldn't say back to. It's back to now because we've been going every year. I was born in Canada. So, but when we're there and we see our family in different villages, that village mentality, that community is they really take care of one another, right? To a point. I mean, there's lots of gossip and politics and all that type of stuff that go on as well. I mean, that's humans in any tribal scenario. That type of stuff exists, right? But if there's someone with special needs in that village or in that community, or there's some elderly people, they all will check in on the person, or they'll take some, if they're heading down to the store for some stuff, they'll take something back for them because they know they need it or whatever. There's just a little bit more of this kind of community aspect. And I guess from speaking to you, I envision that. I'm like, man, if we could get to a point where we're not just everyone's running and trying to figure out ways to keep up and speculating on everything. It's not just, and I'm not just thinking land, I'm thinking stocks, just everything. It's just speculation. And, a few years ago when money was flowing everywhere, it was NFTs. Like, you could speculate on JPEGs and it's just like, do we have more time to then focus on and pay attention to the things that can benefit everyone at a greater good, and not just taking care of the needs of maybe some elderly people, but if we use elderly people as an example, tapping into their knowledge and their experience, so that knowledge and experience they can then get passed down, so that the other people can then benefit from that knowledge and experience as well. So that's what I envision. I'm like, is this a path where there is more funds available? Because not everyone's just speculating and it can go into the proper areas. I guess I'm just jaded. I never think that it'll be spent properly by the government. That's just my own, we can remove that from the conversation. But that's kind of what I see. And I'm like, okay, so this I see where you're coming from with this.
Well, most seniors are on fixed low incomes, right? So one of the distributions that we modeled that's not public yet is if you took the land value tax revenue and gave it back to households as a household dividend. So I think it would be like $12,000 $5,000 a household, a lot of seniors' incomes, would increase substantially. And that's coming from the value of land. So to me, that creates a virtuous circle where, because land value reflects technological progress, reflects society's increase and improvement, and that would be enough to create a full self-sustaining flow so that people can live well and have access to dignity and adequate living at any age. And
the people that are paying, and I'm just going back to the numbers because you said like one of the models, and you have it broken out here. So the land was 194 billion, and then you said minerals and energy and forestry and air, all that type of stuff adds up to 241 billion. But so it brings the 0% tax bracket in your model up to $88,000, which again, just that alone changes things.
For land only. If we collected all of it, it would be, I think it would be like most people would not pay income tax. So this is, for the readers, this is the listeners, this is the report at CommonWealth.ca, quantifying the natural resources, unearned income, economic rents in Canada. Which is, as far as I know, one of only 3 or 4 reports of this kind in the world. Like Australia has one, and like there's a few places. So I wanted to replicate that here to see what's possible.
Yeah, it's really interesting. And then your properties, I know we touched on like the value of the properties would change. So then, given all this, now you started investing before you started going down this path.
Yeah.
Why did you start investing in real estate early on?
Money was kind of a toxic topic growing up. It was constantly a source of anxiety. And I wanted to have a passive income stream that would ensure that I didn't have to worry about food or shelter and the basics. Basically, I wanted to have a basic income. And so in my 20s, I did fairly well in a startup, just enough to buy a down payment for an investment property. And I sold a condo I had at the time. Everyone thought I was nuts because I sold it a year after, because I realized, if I'm just keep investing in bling bling, like where will that lead? And like having studied Buddhism and things, I don't want to be following those kinds of cravings at the time. I rather invest in financial security. So I bought a property that had a cash flow that I could show that eventually it would be like a basic income. It was like a basic income, like right off the bat in terms of its cap rate. So that also led me to be interested in basic income, because if everyone was not worried about survival, we'd have a lot more creativity, a lot more innovation, a lot more risks being taken. That's another talk. We can go into the benefits of basic income, but that's what led me to buy property. And 20 years later, I'm now learning about land tax and how these dynamics actually work. And I look back, I'm like, yeah, it's kind of cool that I bought that property with the intention of yield only, not of appreciation, because that is the mindset of an investor in a post land value tax system, and it's fair. It's a fair system. I'm also unhappy to see the perverse incentives, because the property just keeps going up in value. Like landlords are not incentivized to maintain their properties. I consider myself a pretty good landlord. I do want to invest in the properties. I tell the guy who runs it, hey, figure out ways to make it better in the common areas, and here's some money. Because why not? Let's make it a better living in space. But a lot of landlords, there's no incentive to do that, because you just wait for it to go up. In fact, it's so crazy. I learned about this recently from, what's his name? Steven. He's just a very prolific, the Better Dwelling guy. Yeah.
It's a P, right? Starts with?
Yeah. Stefan something or other.
Yeah, I'm going to butcher his last name. Yeah. I want to try to attempt it, but I'm so off. I think it's like PUS something.
Yeah. Okay, anyway.
I'm going to butcher it. Yeah.
He had a really good tweet thread explaining why a lot of real estate holders would rather keep their units empty than rent them out. And it's just mind-blowing how perverse our current incentives are.
Yeah.
It's because if they rent it out, that kind of locks what its return value is. And eventually an owner might pay less for it if it's fully rented than they would if it was empty, when they can sell it based on its potential rent at that time. So if rents are 10% more in 3 years, you're better off keeping the unit empty, because you'll sell it for higher premium, because the buyer will buy it based on its potential cash flow at the time, not based on its actual cash flow if it's fully rented. So that means we have a system that incentivizes underutilization. That's the opposite of what an economic system is supposed to do.
Yeah, so I agree with exactly what you're saying. It makes perfect sense. But then in that part of the system, is the are rent controls the problem? Because if you remove rent controls, right? And like I'm openly asking this, right? Because, and I'm not trying to lead you to an answer, but if you remove rent controls, then that problem goes away, because then people can then rent based on what the market value is at the time. I know then there's other problems, right? Because then it's like we have this problem with increasing rents and stuff like that, but it does remove that problem, right?
Yeah, it would remove that specific problem. But I think if we had a system where landlords don't profit off appreciation because of a land tax, and that tax was coming back into people's pockets as a rebate, then I would be in favor of not having rent controls, because people would always have enough to afford rent. Mm-hmm. They would always have enough, because we're essentially sharing land value in a way that is much more fair than today. And then the market could actually discover the real price. But in the current system where we don't have something like that, all the value of public support, a lot of the value of public support is just simply going into land values, public support for people in need, and that's basically profiting landlords. And
so the companies that I'm just trying to extrapolate this out in my head, because it's a new thought to me that it has just been the last couple of weeks. So this is the first time I've gotten a little bit deeper into with this conversation. So I 1,000% appreciate it.
Sure.
It's very interesting. So if I extrapolate this out, so then you're a big corporation that owns, a bunch of real estate, whether it's apartment buildings or commercial spaces. So then their costs go up. But their incentive is still there, because they're still providing housing and they're getting the return on their investment from the people that are renting. That really doesn't change anything. It's just the economic structure changes in what they're remitting to the community as a whole.
Yeah. Yeah.
I guess it ultimately comes out of, like, if that change happened today, it ultimately does come out of their profits.
It comes out of
their profits go down.
Yes, the current generation of owners would take a hit, but the fundamentals of a new buyer who's buying a rental property, for instance, or a mixed-use property, that doesn't really change, because the yields from the property will be what it always was, maybe even higher. The yields from the land won't be there, because you would have paid less for it in the first place, because you're paying a land tax. So it's like erasing the part that you pay and the part you get from the land portion, and you're keeping the part from the property portion. But the cap rates would be the same. It could be maybe even better.
Yeah. It would take a strong political leader to implement this, because I just think that on the financial side, because of the pressure from corporations, from current property owners, if they thought that was going to bring the dollar denominated value of their land down, there's just a lot of it would be a hard sell, I would imagine, because everyone gets so fixated on that. I find that people have trouble extrapolating things out. I'm not even saying this is right or wrong, but I'm just saying people would be so fixated on that point that it would be hard to get them to visualize what things could look like 10 or 20 years down the road, and how that changes things in multiple different ways to benefit things in a longer run. That to me would be the hardest thing to try to get acceptance of this in a larger number, I would find.
That's why any major reform usually takes a crisis, like a war or something nuts. And that crisis could be coming with automation and all the job losses that will be accelerating. And currently, land values are already so high that people are spending most of their checks on it. The economy's slowing down. I'm really worried about the next few years. Mm-hmm. I think there'll be a lot of unrest, like way more than the Trump-style unrest, because people are getting poorer. People are house rich and cash poor, and that's just getting worse. I think interest rates will have to come down. This is my prediction in the next 5 years. That's why
so much debt in the system. If it look, to your point, there's so much debt in the system. If they don't come down, the path to unrest is shorter. Yeah, that's my belief. I don't know.
Well, the only reason we don't have it now is because banks are doing 35-year plus amortizations.
Oh, the longest we've seen is we saw
47.
No, we saw 94, 96.
You did here in this office?
Yeah.
Holy shit.
Yeah, it was. I won't say the bank, but what happened is they ended up stopping. They stopped putting the amortization on the statement. That's what they stopped doing. Yeah, we saw it at 90 something.
So it's basically, and people are in negative amortization mortgages now. So basically, this is the return of feudalism. It's not capitalism, right? Like in some countries, 35-year amortizations are illegal because like you're going to end up paying the value of the home like 3 times over, which means even if prices double in the next 20 years, you still won't have made money.
I know.
You'd have paid it back in interest.
But isn't the easier political move to say, because just envision this, right? There's an election coming up. someone stands up there and says, hey, look, we're going to help the first-time home buyer. We're here to help. Okay. Remember, we're the government. We're here to help, right? We all know how scary that is, right? So, yeah. But we're here to help. We feel so bad. Everyone should be able to afford a home. So what we're going to do is we're going to change mortgage, maybe just for first-time buyers. We're going to change mortgage rules, and they can extend the amortization to 50 years, and that takes your payment from $3,000 to $2,200, and now you can afford a home. And I know that's a short-term fix. I know all that will do is then incentivize people, and people will rush out and they'll bid up prices again, and the whole thing's still screwed up. I'm just talking just from a political standpoint. Isn't that the easier thing to do? Like, isn't that more likely?
Well, we are indirectly doing that now, because the first-time home buyers credits is basically helping to co-finance purchases. Now the fucking government's becoming a co-owner. They're taking equity positions.
I know when I saw that. I mean, there hasn't been much uptake there, but even seeing that, it's just like, wow. So that's the path we're going down.
I mean, yeah. If we're talking about more in the current realm of conversation, reforms, I think we've got to do something about private credit creation. Rein in banks' ability to infinitely print credit. And I don't know why, maybe this idea is really stupid because I haven't seen anyone propose it. Maybe we should have a progressive interest rate where, like, the poorer you are, the lower your interest rate, and the richer you are, the higher interest rate. And that way we can help address inequality, and marginalized communities can actually access credit and start businesses and buy homes.
Wow, I've never heard anyone say that before either.
Yeah, I don't know why. I mean, just it seems to make sense, but maybe there's something wrong about this idea. I don't know. I've never read about it anywhere.
Yeah. That's definitely food for thought.
So that would just help more people enter the property ladder, right? Which is good. Like the more people co-own things, the better it is for inequality. But it doesn't change the fundamentals, though, that are raising prices.
The thing that gets me is when someone, if you look at the inequality, right? So someone grows up maybe in a poorer community with less access to some opportunities, but they're like, they're putting in the effort, because there are some people in all communities. I'm not saying poor, like, wealthy communities as well, that are lazy and don't want to put in the effort. And they're just willing to kind of just, ride the coattails of other people. And I'm talking about people that will put in the effort, and they're going to put in the effort, and they've had some savings. And now all of a sudden they're saving up for this down payment of a house. Like you were talking about, you got lucky in some, not lucky, but you were fortunate in some opportunity, and it worked out for you. So they're saving this up. And by the time they end up saving up what their goal was, the asset price that they've tried to buy has inflated so much that they're never able to get out of that situation because of the way things are set up. And that, to me, is is like a fundamental problem with the way our financial system is set up. Part of it has to do with the credit creation, for sure. That kind of amplifies things as well. And I think what happens is, the way our financial system is set up, people just look at it as maybe like this inflation number or whatever the case may be, but it trickles down to so many aspects of society that, like, a lot of the problems that we see, I feel like can be addressed if we get maybe things like this or whatever it is. I'm just talking the manipulated money system, in total, and so I'm looking at a different angle, but the same type of principle. That's what I feel like sometimes people don't see. Because if you give people proper incentives, and if they produce enough value into the economy, and where they can store that value in something that will then hold its purchasing power, then it changes the opportunities for people right across the board.
Absolutely. That's why we're better off taking land off the table, so people put that in businesses and stocks and things that actually make capitalism go, as opposed to things that drain capitalism. And to the point of some of the problems in society, I believe I saw a research that in Canada between 2002 and 2015, the net worth of renters at all levels of income, increased on average by $10,000. Yeah. The net worth of homeowners increased on average $380,000. So, I saw
that. I think that was a TD report, if I remember correctly. It might have been something else.
So what this means is that you'll have a class of society that is permanently renting and working hard to produce value for the other class of society that happen to buy their homes first. That's just not really fair.
Yeah.
It's the big wedge that Henry George talked about. Henry George was a huge proponent of land value tax in the late 1900s. And it's a wedge between society that is fundamentally unfair. So an LVT would solve that nobody really profits dramatically from appreciation. They profit from hard work. They profit from starting businesses, from investing, from creating things. And that would be a fairer society.
Yeah, I think that's what I didn't early on with some of the way you looked at things, and we didn't talk about the UBI stuff, and I would definitely love to have you on again and talk about that stuff, because it's because like I said, your thoughts are very well thought out. But
I try.
And I totally lost my train of thought. But anyway, it was on the UBI stuff. I thought you were coming from a position of just like it was just kind of giving people everything. But it goes. You're coming about the economic impact and like I said, I've lost the point I'm trying to make. So I'll forget that one. But specifically on the land value,
UBI is not charity. I think we should see it as a share of economic progress that helps those who are in most need. Who have been cut out from that progress for a variety of reasons. That's how I think about it.
Yeah. On the land value stuff, is I get it now, because you're like, no, this is how we incentivize people to actually do something for the economy. To actually, because in Canada, this is what I was thinking about earlier. In Canada, it's really strange. Like the amount of investment we have into research and development and new business, it's incredibly low. Like I had a chart, and it's like astonishingly low from where it was. And this incentive for that everyone's taking their money and parking it someplace because they're trying to protect their purchasing power, or they're speculating, or whatever the case may be. It's generating greater problems in our economy that haven't fully come to the surface yet. But we need incentive to invest back into research and development as a country, so that we can produce goods and that there's demand for, that then can benefit everyone. And I think that's sometimes what often people don't look at, is like, well, I'm just going to do this. But when everyone's doing that en masse, those funds are coming from somewhere else. And right now, where they're coming from, because there's not enough incentive to get people to do things that are productive for the economy and create new things and new jobs and new technology and all this stuff, we're falling behind as a country because of that. So So now I get it. Now I understand greater where you're coming from. Like, no, look, we want to do this because then, you've extrapolated out the steps, right? And it makes sense. It's not just because people that own properties, so they're making more and they're getting richer, and we just need to make sure that they don't get richer, and we have to, give other people money.
This is not about inequality. This is about the vitality of our economic system. It's making it into real capitalism, and like hundreds of billions of dollars that are being sunk of people's working checks are being sunk into living expenses that could actually be sunk into the economy. Well, invest in the economy, which would change the dynamics. So it's not about that there's no incentive to be successful. Of course there is, but there's more incentive to park it in real estate than there is to invest it in something that actually helps the economy. And that's the problem. That's a perverse incentive. And that's something that I think would be resolved by this. And from a macro level, here's another stat I love. It blows my mind. We often hear about labor versus capital, right? It's the old socialist versus capitalist. This dichotomy is false. It's been proven now. There's a graph that a lot of economists, especially left-leaning economists, talk about income share to labor versus capital. How much of the money in a country every year is going to capital holders versus workers? And it's been getting worse for workers for many decades, and automation is a big reason for that. But if you factor out the housing market, what you see is that returns to housing from the share of national income have been going up, while returns to capital and labor have been going down. This shows in very clear sight that our over-reliance on the housing market as an investment tool is actually draining the plight of businesses and workers alike, which is the original view of Adam Smith and Henry George and these early economists who saw that the landholders are just sucking the vitality of the economy, and it's still happening today. So today we're advanced. It's been hundreds of years. Land values are quite expensive. And it's still happening today. That's why we'll always have a working poor class until we change our relationship to land value.
Let me ask you one other thing. I'm curious. It just came to mind. If the value of these properties ended up going down, the banks, because Tom and I, when we speak about stuff, like the banks never lose. It's like the banks are always the winners and everything. But in that case, because of the debt against the property, if the value of those properties went down, it puts the banks in a very bad situation. Doesn't that become problematic? And then extrapolate that out. Doesn't that then become problematic in a bigger picture?
Well, yes. However, that's a transition issue. And I've spoken to a lot of world economists, world experts on this. And one of the suggestions is that if the value of the home sinks below the actual outstanding debt, then part of that land tax can go to the bank as a form of payment towards its interest.
Banks don't lose.
Yeah, so I mean that would be if the banking sector is so powerful that has to be done. Yeah. So, but that's still worth it from a long-term perspective. You could have seniors and farmers have a lien, deferring the tax till sale. So put it as a lien, a super low interest lien that only the government could offer, a super low interest. Or you could have debt cancellation. Frankly, if banks are creating credit in the first place, then why can't they just cancel it? And then maybe taxpayers can fit the bill for the foregone interest, like a little penalty for the interest, which would be very small.
Or if they've earned a certain amount of interest, why can't they just cancel a part of the debt? I mean, the banks, do you know what I mean? The profit's been there.
I'm not an expert on that, but there are some corollary side effects that I want to learn more about, because banks will then securitize and resell securitized mortgages. Remember the whole subprime crisis? Yep. So I don't know what that means for the next buyer, and then the next buyer and the next buyer of that security.
So this probably is a taxpayer, because I mean, ultimately the government's buying a lot of those securities from, well, when things get dicey, our government in the past has stepped in and bought a lot of those securities from the banks to free up as a way to inject liquidity into the economy, right?
Yeah, which is crazy, because that's also pumping up housing prices. Yeah. Right. So they're preventing a fall. They're actually encouraging banks to do risky behavior, because at the beginning of COVID that happened, right? I think $80 billion was spent buying distressed mortgages from the banks.
Oh, it was like monthly. It was more than that over time. I could be wrong. I remember looking at the charts. Now I forget the number, but yeah,
it was a big number. And the worry is that we're going to have another 2008. So to prevent banks, to make sure banks keep lending, they bought all their bad mortgages so they could keep lending. And then what happened? Well, they kept lending a lot, and then prices skyrocketed.
Yeah. We had some sort of problems already. And then the monetary policy, the low interest rates and that type of thing just was fuel on the fire, for sure. Yeah. Man, it was really interesting what you said, because I've been looking around lately. We started talking about the population growth and supply. This was a number of years ago. I think it was like 2016. Yeah. And no one was really talking about it. And it looked like we're like, oh, okay. So it seemed like there was something to it. And now that everyone's talking about the supply demand and like imbalance, we're always under the impression, like, if everyone's talking about something, what are we missing? We're always trying to look in the other direction, right? So that's why I'm like, there's not something here. So I'm glad you brought that up.
Well, immigration's a real factor. I think I saw a BMO report saying that a lot of our housing price crisis is due to speculative demand, but with the increase in immigration, eventually that it'll be due to actual market demand.
Yeah, I think it's just overused. I mean, because I'm in real estate, sometimes it's just I hear it now everywhere. Like, oh, well, supply and demand. There's not enough housing. It's like well, that's not the only thing going on. Like we've just discussed. There's a ton of other stuff impacting things. Floyd, look, if people want to reach out to you, like, what's the point? Is it follow you on Twitter? Is it going looking at these reports? So there's
follow me on Twitter. Also, you can follow CommonWealth or UBIWorks if you're into basic income.
Okay, so UBIWorks. So it's UBIWorks.ca is the basic income stuff, which we didn't speak about today. Yeah. If you're interested in that, which has got some really interesting information there, which I'd love to speak to you about again. Sure. But for this stuff, this website, which
CommonWealth.ca, and that's where we're studying land tax and rents on natural resources. And then my own personal Twitter, I do a lot on this stuff as well, and trying to be more courageous on TikTok, but developing those skills. Yeah.
And I try to stay off. The people in the office do it for us. I just found that I'm not a social media person. I stay out of all of that stuff, so I don't even know what's going on. But hey, really appreciate you coming in short notice. I think you're taking off, so I really appreciate you making it work and stuff.
This was a lot of fun.
This was really good.
Yeah,
cool. Thank you.
Good. Thank you.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Terms show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.